Hello. Welcome to another video from 10x Investor Education. So in this video, I would like to talk about a couple of top 2022 picks from lot of unlisted companies that I have been following. So for last couple of days, I have been reviewing Bank of America, CITI, Goldman Sachs, Morgan Stanley, Cowen, Barron's, Oppenheimer, CNBC Investing Club, Kiplinger, Motley Fool, and a lot of other seeking alpha investors. So all of them, they have come out with their top 2022 picks last couple of days and couple of weeks. So I have been analyzing them. I'm trying to find a common pattern among those and a sector wise and stock wise. And if there are multiple stocks that are common across more than 2 or 3 unlisted firms, then I am picking and presenting those. So this is my first video for 2022 stocks. This is quick video, hopefully 5-6 minutes quick video. So I would talk about 3 picks in this video. I'll probably talk about 3 picks in next video. So this is not an investment advice. This is purely education purpose because a lot of people are asking for me stocks for next year 2022. So starting with, again, this is not my picks. These are picks across common, across aggregate data, across a lot of these unlisted firms. Okay. So let me tell you, a lot of these firms, Citibank, Bank of America, they could not beat S&P 500. Bank of America last year picks, some of them went by more than 50%, but a lot of them went down by 20-30%. Okay. So don't take this as like a golden egg, but when you have multiple firms focused on a sector, on a stock, there is high chances of that getting right. Okay. So let's get into the details. The first one, my favorite, the Barron's favorite, is Berkshire Hathaway. So the symbol is BRKB. Okay. So if you look at the reason why I picked Berkshire as number 1, I'll tell you 2 things. Okay. So Apple, both JP Morgan and also Morgan Stanley, their top picks for 2022. So JP Morgan raised the price target and their top pick is Qualcomm, but whereas Morgan Stanley top pick for 2022 is Apple. Okay. So Apple might come out with a Apple Car announcements next year 2022, and also the time span between each $1 trillion market cap they are adding is reducing. It took first 2 years, then 1 year, and then like that. So could it be a $4 trillion company in 2022 and 23? It is possible, especially if they announce Apple Car. That could be a potential of 200 to 210 stock price target based on what analysts are saying. Okay. So if you don't have Apple, if you don't have banks, if you don't have an energy like Chevron, okay, so the best bet to have a diversified ETF like stock is Berkshire. Okay, so listen to me carefully. Berkshire, the reason is, so 2 most successful, highest performing sectors for 2021 have been in stocks. Okay, is financials, energy. Still they went up a lot. Okay. So especially those are value stocks, and whenever these value stocks go up, Berkshire does really good. And last couple of years before, 2020 and 2019, Berkshire really did bad because at that time growth stocks, like especially large cap tech stocks, are going up. At that time Berkshire will not do. Okay. So Berkshire, 50% of the holding is still Apple, and then they have a next lot of American Express, Bank of America, Coke. All I like those holdings. And also coming to energy, they have Chevron, so which is also top performing energy, and also energy is one of the major, again, 2022 common theme across all these firms. Okay. So the performance of 1 year performance so far for 2021 has been around 25% for S&P 500. So Berkshire already did 32%. Okay, so 31%. So like 6% difference in stock is a lot of difference. Okay, 6% is a lot of money when you are having millions of dollars of portfolio. So especially when value stocks financial does good, Berkshire does good, really good. So last couple of days financial went down. Reason because of Omicron, and also 10-year yield is going down. That's the reason why financials went down, and also Berkshire went down. Okay. So but if you take, eventually interest rates are going to go up for 2022, which is really good news for these financial stocks. And this is the most important point I want to talk about. Lot of these financial company, energy companies, lot of these low PE stocks, they have been heavily buying stocks. So they are doing buybacks. Okay. So and they continue to do buybacks for 2022 as well, a lot of them. Okay. So on top of these buybacks, so Berkshire is doing the one of the highest buybacks. Okay. So they did almost $20 billion 2020, $26 billion 2021. They'll give a lot more money potentially in 2022, because right now they still have a capital of $150 billion, and then they want to reduce it to $20 billion. So don't get surprised if they actually buy like $50 billion worth of their own stock. So when these value stocks buy their own stocks, and on top of it Berkshire buys their own stock, and if you are not a growth investor, like not if you're not a dividend investor, like you don't want dividend income because you have to pay a lot of taxes, then Berkshire doesn't pay dividends, but the share appreciation goes up. Okay, so you could potentially sell now next year or sometime, but that way you can control how much tax you want to pay. So for that reason Berkshire is better strategy than people who are looking for dividend income. Okay, so Apple did a lot of buybacks, and a lot of these banks did a lot of buybacks. So as I said, Berkshire is not a topic across a lot of firms, but Apple was topics. So lot of Chevron was one of the topics, and also a lot of other companies in Berkshire topics. So that is the reason Barron's picked Berkshire as topic. Okay, so the reason why I like Barron's is because so they are very conservative, and they find the trends very neatly. Okay, reason is Bank of America, CITI, none of this could not beat S&P. The portfolio that closest to S&P before year was Barron's. Okay, so that's the reason why I like their picks. Okay, so that is one, Berkshire, BRKB. I think the 52-week high is probably 330 and probably 280 low. So it's, I think, trading close to 52-week, not 52-week low, but it's like trading at least 10 to 15% discount from 52-week high. Okay, so the next one is probably a lot of people can expect this, is entertainment media company Disney. Okay, so Disney is a top pick for Bank of America, JP Morgan, Kiplinger, and also a lot of bloggers and Motley Fool. Okay, this is number one pick of their all these analysts. So the reason is Disney got crushed, as we know, because of the COVID last year, and they actually did their growth for Disney Plus was not good for the last quarter. Okay, that's the reason stock price went down, and as the Omicron actually news came and also went down. So the first quarter might be still struggling for Disney, but their expectations, unless what they are saying is, so they are focusing on Disney Plus, increasing it. They are going to spend around $30+ billion on the original content, and also a lot of marketing, and also try to increase the subscriber growth. And a lot of the sports games again will be back, and parks will be in full throttle next year. And the Disney actually trading below price before pandemic. So $140 is even before lower than before pandemic price. Okay, so Disney Plus is actually the new revenue potential is not even there before pandemic. Okay, so the logic for arguing unless is actually Bank of America said 2021 their topic is Disney, but Disney went down by almost 50% 2021. So that makes sense, and I do agree. Potentially after first quarter, if they can at least say the future guidance is Disney, we are going to beat the quarter and all parks are open and Disney Plus on a growing sector, and especially the old Voyager is coming back to Disney. There is a potential that news itself, the stock is going to go up. So I think this is a long-term value pick, Disney, and the potential for going down 10% is low, and potential for going to $180-$170 is high in 2022. So this is another topic for Disney. Okay, so next one is, so the common theme across all these companies is, all these analyst firms is energy. Okay, so they have one or two financial picks and one or two energy picks. Okay, so if you take Bank of America, their top pick energy is Exxon Mobil. Okay, if you take CNBC Investing Club, and if you take other companies, Motley Fool and all that, so their topic is Chevron. Okay, so whether you go with Exxon or with Chevron, so Chevron is actually for the break-even price for oil price for them to break even is $40. Exxon it is $45. So if the price doesn't go below $45, they still make money. If the price stays at $60 and above, so Chevron is going to make $25 billion profit. Okay, so it has to stay above $65. Okay, so given the current price of $68, $65, and there's, once this COVID gone, I think there is still a lot of energy demand in 2022 in my view. And these guys like Chevron gives you 5% dividend and Exxon gives you close to 6% dividend. So this is like a low PE stock, dividend income stocks, and they are, you don't have to buy today Chevron because it got really, because of the Omicron news, it got really thrashed. So you can look for opportunities, buy the stocks at a lower price, and then put it in your long-term strategy. Okay, so those are the three things I want to talk about today. So these are not, obviously not my picks. I'm just adding why I think these are good picks. So as I said, one is Berkshire, the second one is Disney, and third one is Chevron or Exxon, whichever energy pick you want. Okay, so if you like the video, please click the like button, and please do not wait for my next video of next top 3 picks for 2022. So I'm reading all these analysts and why they want to pick those, and you have to find a common pattern within the sector and stocks also. So wait for my next video for the next top 3 picks for 2022, and see you. Thank you.